Hello traders, it's me Lato. Today I'm going to be breaking down XAU USD, which is gold. Okay, so if you're going to look to your front, you can see that statement there. Okay, so think about this. Okay, creating a trading plan is a critical component of successful trading. It should include your profit goals, risk tolerance level, and evaluation criteria. Okay, you need to think about that. So when it comes to trade, obviously your 80% comes from your brain, and 20% that comes from the technical analysis or the fundamental analysis. Okay, so you have to think about those things. Right. Talking about gold, gold price remains in a bearish setup. It is only for the near term, guys. Okay, so for the long term, what I can see is my personal bias with the gold is still bullish. Okay, still bullish. Let's see the monthly chart if we can see something else there. Right, okay, I'm going to use my Fibonacci tool from the swing low to the swing high. Okay, there. Why do you think I'm using from here to there? Because here you can see the market started from there. Okay, that is the strong demand area, and that was the strong impulse. Okay, here you can see all the green candles. Okay, and from that area market rejected back. Okay, and then tested 0.50% of the Fibonacci level, and again here you can see the green candle that tested 50% and then went back up. Okay, from there, because of the strong resistance, market melted back down. Okay, so the current candle is being held in between 0.382 and the 50% of the Fibonacci level. So think about this. This is still impulse, and this is the exhaustion phase or correction, and the next move should be the continuation. Okay, that is why my personal bias is still bullish. Okay, let me delete this and then go on the weekly chart. Right, so weekly chart, I'm gonna use the Fibonacci tool again from the lower swing low to the swing high. Okay, again that is the strong impulse. Okay, and that was the correction. Right, so here you can see the market, the 0.382 level of the Fibonacci level was tested for a couple of weeks. Okay, and then the red candle here you can see that was the hard sell-off. At that time, that candle managed to break the strong support zone. Okay, and then the market tested 0.50% of the Fibonacci level, and then from there market went back up. So because of that strong support, the market found the strong resistance, and then market came back down and tested that 0.50% of the Fibonacci level for a couple of weeks, and then went back up. Okay, so it came back and then tested again, and that red candle you can see there. Okay, so again the big sellers were there, and then it was the hard sell-off, so that that candle was able to break 0.618 of the Fibonacci level. Okay, and the market tried to go and test 0.786, but could not be able to do it, hence why market rejected from that level back to there. Okay, so from there, because market tried to make a higher high, at that time market failed it. Okay, that was the recent previous high. Market tried, but couldn't go upside, hence why market melted back down towards the 0.618 of the Fibonacci level. So here you can see it looks like the last week's candle. It is a engulfing bearish candle. Here you can see it looks like it has already broken the 0.618 of the Fibonacci level. Okay, so from there what I can see is the near term okay, near term one. What I can see is market could go back there and then come back and then refill that the wick. Okay, so it could be filled in due course in short term. So it looks like it is a bearish momentum at the moment. Okay, so let's go and have a look on the daily chart if I can see something. Okay, so let me see the week one. So weekly one, I have forgotten to mention one thing, which is the trend line. Okay, so I'm gonna draw a trend line from there to there. Okay, obviously I'm gonna use the line chart. Okay, so just adjust this. Okay, so what I can see here is the trend line was respected twice before, which is this one there and that one there, and then third time the last week again the trend line was respected there. So from there, whether the market could reject from that zone over there, or market can break below the trend line, and it could go back to retest that level over there, and market still can go down. That's what I can see from the weekly time frame. Okay, back to candlestick chart and daily chart. Right. So daily chart again, guys. Okay, it is only for the short term one, which is like a intraday. Okay, so what you can see is the market has formed okay, YAM pattern there. Okay, and then last Friday market rejected from that level over there. So it looks like it is kind of the snapper entry. Okay, people might have gone long from that level over there. Why? Because the market started from there, so the buyers are still in position. So buyers did not want to break that level, hence why the market rejected from exactly that location there. Okay, so what I can see in the near term, then that could be your target. Okay, that could be your target zone. Okay, so if I gonna go and have a look the 1 hourly chart, what we can see. Okay, here you can see I have already marked the short-term target. If I were to go for the longing opportunity, obviously I might wait until the market comes back to that level over there. Okay, why? Because that place there, okay, that area there, okay, when the market comes back, okay, come back to that level, it will definitely find the strong support. Okay, whether this support over there or that support over there. Okay, when it will find the support, then from that zone market could go up towards your near-term target. Okay, that's what I can see from the intraday view. Okay, so guys, again, it is my technical analysis. So it is not an advice, as I'm not the financial advisor. This is only for the educational purpose. Okay, so take it that way. So thank you so much for watching my video. See you in the next video. Until then, wish you good luck. Take care. Bye bye.